Imagine losing thousands of dollars in retirement simply because you didn't plan taxes effectively. It's a reality for many, but it doesn't have to be for you. Welcome back to The Outcome is Income. I'm your host, Chance Robinson, and I'm joined today by Christina Reyes, a professional retirement tax planner with years of experience helping retirees and pre-retirees uncomplicate the tax code.
Thanks, Chance, for having me on the show.
Absolutely, absolutely. With tax laws constantly changing, the stakes are higher than ever. Understanding how to leverage taxes and planning them correctly can make or break your retirement. Be sure to like, follow, and subscribe wherever you're listening from. All right, so we'll get started off. I want to talk about the tax-efficient window that we're in. We know we got a short time frame right now to be able to take advantage of where the tax codes and where the tax rates are at right now. Can you tell us a little bit about what's on the horizon tax-wise?
There's going to be drastic changes to the tax brackets. They're going to change. We've had a substantial increase, the most we've actually had in years, to remain in a lower tax bracket. So that will change. I believe coming up in 2026, it will begin to kind of get back to what we call a little bit normal.
So what's your thought pattern? Because I know that the Tax Cut and Jobs Act expires in 2025. So 2026 will start that effective new tax rate. Essentially, what was supposed to happen was the Tax Cut and Jobs Act was supposed to lower taxes for a set amount of time. Then they were going to revert back to what they were prior to 2018 before. Do you think that they still revert back, or do you think that they go higher?
Right now, it's just a little bit of a toss-up. I know the Federal Reserve had met and Congress was questioning them a lot about the inflation and how things are going, and if things begin to fall, kind of what we've seen a little bit in 2008, what will they do? So I'm not sure. They're not kind of showing their hand yet, whether it will be that drastic, increase to benefit us, or the opposite, that will be back more 2018 and on the flow of where we've been.
I think that the election is going to have a big weigh on that.
Absolutely.
With the upcoming election, we've kind of seen some tax proposals from both sides. I know from the existing administration, the tax proposal right now is raising the max income tax rate to 44%. And the big one that kind of trips me out about the whole thing is the unrealized capital gains tax. They're talking a 25% unrealized capital gains tax. Have you heard anything about that? Or
Yes, they are talking about that. And they actually hadn't changed the capital gains rates in many, many years. Right. So they are talking about that. Many people don't realize that if your income is under $90,000, you can take advantage of 0% capital gains rate. So they have noticed that lots of people had tried to work their income into that bracket. Right. So now they are trying to make drastic changes in that area.
The part that kind of blows me away is the unrealized capital gains, meaning if my assets increase in value, not that I sold them, not that I withdrew them, not that I, distributed those assets to myself, but just because they rose in value, I have to pay capital gains on them now. What if it's back down when I do actually sell that? Or what if I've taken a loss by that point? I've already paid taxes on money I never earned. That one blows my mind. I don't think a lot of people understand the level of where that really goes, because what happens if your home increases in value? That's unrealized capital gain.
Yes, it is.
On top of retirement accounts or savings or anything else. I mean, that's unrealized capital gains touches a lot of different areas.
It does.
What is your thought process on where we're at? So we understand we're in a pretty tax efficient window right now prior to the Tax Cut and Jobs Act expiring in 2025. What is your thought process on people trying to utilize like Roth conversions and things like that to try to get out of taxes right now, or not get out of them, but pay the lower rate that they can before they increase?
My perspective on that is that we need to take advantage of the time that we're in, because we can't predict what's going to happen, but we know exactly what we're looking at now.
Right.
And when I sit down with a client, I am able to give a realistic tax plan effectively to them, not based off what we think that the IRS code will look like, but in fact what it is now.
Right.
And for them to begin to make moves and make steps on that, especially when it comes to the Roth conversions.
I think that's a very interesting aspect of it, because usually we have no clue what's going to happen in the future. But for once, in this tax window that we're in, we actually know, hey, this date, they're going to make adjustments. Somehow, some way, there's going to be some adjustments that made. So I think that's a pretty unique time frame, or a unique perspective in this area in general. Most common deductions or things that people miss when trying to do, you got your do-it-yourselfers that want to do their own taxes, or even using some of the software that's out there like TurboTax or those things. What are the advantages of working with a tax professional from that standpoint?
The itemized deduction could be in their favor, especially if you have lots of assets, lots of moving parts in your tax return. Some people just are like, oh, the standard deduction is now $29,000 for a married couple. And like, oh, no, I don't think I have that much in expenses. But when I actually sit down with a client and begin to give the categories of what we can actually itemize on a Schedule A, it's substantial. A lot of times it's over that $29,000. So I think they do themselves injustice by just saying standard deduction.
So, really looking at some of those alternative strategies than just a traditional, and I understand, they raised the standard deduction for the Tax Cut and Jobs Act to try to be more of a catch-all, be-all, but that's not the case for everybody.
It's not. It's better off to make sure that you should take the standard or you should itemize. Just the same as the standard deduction went up, all your other out-of-pocket expenses went up, especially medical. Medical expenses are substantially high right now. So just those out-of-pocket expenses could kick you over into itemizing.
I'd say now more than ever, you bring up a really good point with the cost of living has changed drastically over the past couple of years. I mean, on average, it's somewhere between 20 to 32% on average of the real increases. I know, you sitting or wherever you're listening or watching from, you may have seen some of the numbers. We're at 6% or 7% or 8% inflation, but we all kind of know the real numbers. Like, those aren't real numbers, right? No. When we go to the gas pump or the grocery store or anywhere else, it's not only 6 or 7% higher than it was. I mean, gas on average 2 years ago is up 32%. Groceries are up 42%. Eggs are up 72%. Building materials and clothing, I mean, everything is up drastically more than 6, 7, or 8%. Those are specific parameters for a specific metric that they're measuring. That's not the real inflation that hits the pocket at home. So with those increased expenses, what you're saying is a lot of times it could make sense to do an itemized deduction, because we have seen drastic increases of inflation and expenses that are going out, that maybe the standard deduction in 2018 might have caught a little bit more of that. However, after a pandemic and all the inflation, it's not the same story.
It's not. And just how the housing market has risen so high and the assessed values have went up, well, that means your property taxes went up. Yeah. So now when you add property tax costs, insurance, all those things you're able to itemize on, they're a lot higher than they used to be. $700 a year for homeowners insurance, and then maybe $1,200 a year for property taxes. Of course, you're going to take the standard, but now it's not that. Many people are paying over $5,000 for the year in property taxes.
That's a very interesting point. I was watching something this morning, and they were talking about kind of all of these numbers and different things, and it set me on. I want to go down this rabbit hole, but I haven't done it yet. When they were talking like the differences between like the average housing cost, 3 years ago compared to what it is today. I know it was up like 30% or something. I want to say it was like roughly $327 or something like that was the average cost of a house 3 years ago.
Yeah.
And today it's like $416 or something is the average cost. And the average interest rate then was 3%. Today it's like 5.5% or something like that. Mm-hmm. Average. We know that's not the current, but
exactly
the average over that time. So when you take that difference and say, okay, a $300,000 house at a 3% interest rate or a and $30,000 house at a 5% interest rate, there's drastic differences in interest that has been paid. So what kind of takes my mind to is, okay, what's the average income been? What's the average, debt to income ratio? How are they able to afford these increases? Because 5% on a 4.5 or a $430,000 house is a whole lot different than 3% on a $330,000 house. So I haven't gone down that road yet, but I intend to. I intend to.
Me as well.
Once I get exposed to it. So, because it starts to kind of think of where our economy is at and kind of what to look out for going forward. I mean, when we can kind of read into these things, the better data that we get, the more educated decisions that we can make.
Absolutely.
From a tax perspective, in your expertise, what would you say are some of the most beneficial tax ways that, our listening audience or anybody who's looking to kind of leverage things a little bit better for themselves? What are some of the, I'd say, tools or kind of insider secrets that you would say? What things would you talk about?
What do you mean to talk about, like with my
Are there
clients?
specific like vehicles, or are there certain accounts or things that you would recommend? Is there, I don't know, like,
The IRS the code is just kind of an essential, a little bit, I don't want to say cut dry, because there's always, ways around to use the code to your advantage, but it's kind of on a client base-to-base basis, meaning like whatever situation they're presenting, I'm able to look at every single angle and then come up more with a identical or best plan for them strategy for that client. So it's a little hard to say kind of what the tools are unless I'm presented with a situation that they kind of keep facing year after year.
So I'm thinking more like general tools, like maybe utilizing trust to talk about the step up in cost basis that's leveraged there, or ladybird deeds, or land trust, or whatever those things may be, that a lot of people just aren't aware of the basic things. What would you say out of those things, or things along that nature, kind of stand out that people just overlook?
The land trust actually is a big one that it's actually gotten pretty popular in the last probably 2-3 years, to actually put your properties, as long as they're owned by a land trust, it actually doesn't cost or implicate any tax implications, and you're able to defer some of your capital gains having them in that trust, because you really don't own the property. Yeah. So when you go to actually dispose of that property, it's in a different code than it is of your standard capital gains.
All right. So we've had some discussions before about, real estate and kind of some of the tax leverages there and some of those things. And I think a lot of people misinterpret or overlook some of those advantages or strategies. With real estate, outside of your primary residence, there's tons of advantages, for, the people who are actually doing some investing, and things like that. Now there's a kind of bug going around right now telling people to take out money from their equity, or doing a HELOC and those things like that right now. What's your thought process on that from a tax standpoint?
From a tax standpoint, and from real estate as well, I don't feel it is a good time to leverage your equity at such a high interest rate. Yeah. You're gonna almost pay double back if the rates come down a little. Then it's wise to actually do a HELOC or even a home equity loan to take it out on your property, to either invest in something else. That way now you have more properties to leverage, but of course doing tax planning as well, like putting them in a trust or doing steps ahead of time to also defer your capital gains, but be wise in the market as well.
I think that, a lot of people are looking at those situations saying, oh, I've because of inflation and because the home values have shot up, I've got a lot of equity there, and I want to grab it. I want to use it. The problem becomes, where am I going to use it? Because I'm now borrowing this money at 7-8%, where am I going to use it to earn more than that? And I mean, yes, there are some unique cases like, I could go into tax liens or something like that
Right.
if I was reinvesting and guarantee it. Most people aren't doing that though.
Absolutely. They're
Most
not.
people aren't doing that. So, I think it's an interesting thing. Some of these things that kind of bounce around the internet, or some things that I see or hear from other people who aren't maybe as involved in the financial industry or maybe as educated as it. I mean, let's be honest, all advice is not equal. This is why you're a professional, and I think there's a big difference that kind of lies there. What I want to talk about next is, you have a lot of people who misconceive the difference between a tax planner and a tax preparer. What's your kind of thought process there?
A tax preparer is simply that. They're preparing taxes. You're going to bring your paperwork in. They're going to simply input the data into their tax software, and a number is going to spit out, and they're going to say, hey, you owe the IRS $15,000, or woohoo, you're getting a $4,000 tax return. A tax planner is with you all year long, making moves with you, helping you make decisions that in the end, you are not going to be surprised by what your tax outcome is going to be, because you're actually making moves with that tax planner to be in control of what that end come will be when it comes time to filing taxes.
Yeah, I think that's, drastically undervalued right now. The difference between working with a tax planner and a tax preparer, like, hey, if I'm getting close to the end of the year, I got a pretty good idea where my income's going to be. Are there things that I can proactively do to lower my potential tax bill when the new year comes? And I mean, we both know that answer is yes. I could contribute to IRAs. I can, look at HSAs, health savings accounts. I can kind of stick money in different honey holes, per se, to kind of leverage some of those tax benefits. But once the new year hits, it's kind of too late to do some of those things. If I'm not working with a true tax planner like yourself, I just got to bite the bullet and try again next year.
Absolutely. And especially with our retirees, and when it's time to take those RMDs, some of them are so blessed that they don't even need the RMDs.
Yeah.
We can put that in a qualified charity. Then it's not even counted as income, but we have to do it before December 31st. So that's part of using a tax planner versus a preparer. A preparer is not concerned whether you owe or don't owe the IRS. They're concerned about the next client just coming in. But a tax planner is actually wanting to be a part of the success in your tax goals. So just those little things of RMDs and having your IRA actually contribute to a charity for you, now you're not having your adjusted gross income increase and paying more taxes just on that one strategy.
So let me ask this. In your professional opinion or career, what has been your biggest driver of being involved in the tax industry? I know, from the financial aspect, I enjoy the constant change. I almost enjoy the chaos, because there's so many tools and tips and ways to maneuver that, not everybody is looking at things the same way. I like to talk about it all the time. Just like I led to, not all advice is equal. Like, some of us really hone that craft, and you can see the passion. I know your passion of the industry. You're at a different level than I am, because God knows I don't want to do anything with paperwork or anything. And it is meticulous when it comes to filing taxes to be with that stuff. I'm a planner. I turn to true professionals when it's time to really implement things and get it going, because man, the getting down into the weeds and doing the paperwork and understanding all the nuances and rules, that's a whole different animal. What is your passion that kind of keeps you involved in that aspect of the industry?
I have to agree with the chaos part of it. So even though, it can be chaotic, and especially when tax season is heavy and things like that, I love it. And I love tax planning because the tax code is so big. And when you have a client that comes to you and, they're looking for just ways to save on capital gains, let's just stay on that one, that, you begin to decipher the tax code to try to find, because maybe their situation is unique. And I've looked at the tax code thousands and thousands of times in my years of experience, and there's always something new. Yeah. So it's like the challenge of finding something else in that tax code that you can actually use for a strategy with your client is just like the greatest feeling out of that chaos, actually.
Yeah. Let me ask this, because this is kind of a hot topic that's coming up, amongst everywhere right now. Artificial intelligence. Are you utilizing it in any capacity to help you in the industry or in the tax industry at all?
The only way we're using it now is actually through the tax code. Actually, Adobe has put some of that in their interface, in their platform. So when you actually open up the tax code, which is a big PDF, the publication is huge on our desktop, we're able to decipher a little better just by speaking the client's situation and what's happening.
Yeah.
And it will begin to jump the code out. But of course, you need to have tax professional knowledge to be able to read the code once AI pulls it out for you. So
that was the biggest thing to me. I was like, because a lot of people hear that and they're like, oh, the AI is going to come and, it'll be able to do my taxes and all that.
Right.
And it's like, the thing about AI that I've learned, and God knows I swim through it constantly, I'm checking it every day, but you're only going to get out what you can put in. So if you don't know the right questions to ask or have some kind of foundational knowledge of taxes or being a professional, like in your situation, you're going to get out very general information. But when you can be more specific and point to different codes and different things that you're aware of, you get a whole different output than, somebody trying to sit at home and figure it out on their own.
absolutely. Like maybe we'll just throw out a tax code number. Let's just take 643, which just talks about how you utilize a trust and to be able to defer capital gains. Next thing you know, it'll pull out a couple more, any that are relating to just that one word trust. And it's codes that we had never even seen before. And they were in chronological order. That was 643. It was 656. And you're like, okay. But you have to be able to decipher the code. And that's actually a phenomenal part of AI. But it's because we put the right words in. Now we can use it in our industry.
Yeah, that's key. I've looked at it several times, and I'm still trying to find the part of when is it going to be a true assistant? Like, I get good information. It helps me write a little bit better and all those things. I can't wait for the part that I can say, hey, do this, and it gets it done. That's what I'm waiting on it. And we're close. We're inching up there, but I am looking forward to it because I'm going to have it working.
Yeah. I see it.
From tax perspectives, there's all kinds of legalities in the tax world. And I know, we've had conversations before. The entire tax code essentially is a book that's written to tell us how not to pay taxes. I mean, they literally sit there and say, well, if you do this, we'll cut you this break. Or if you do this, we'll cut you this break. I mean, the tax code is to incentivize people to do things that the government wants them to do so that they don't have to pay. Like if I invest in, HUD housing or housing for family for needs or whatever that may be, they give me a tax credit. And then there's oil and gas tax credits and there's renewable energy tax credits. So, understanding some of those nuances, is there anything that stands out to you, maybe that's on the horizon that people should be aware of that's happening in the tax world?
Honestly, I think the clean energy credit is really being overlooked.
Really? I'm not familiar with that. What is
The clean energy credit is kind of everything, whether it's from your home, your cars, so the AC units now. Everybody just thinks of solar panels, but it's more than that. It's if you get an energy vehicle, the credit is substantial. Like buying a Tesla, the clean energy credit is substantial.
Really?
It's a huge tax break. Even just now AC or just the heat pump for your AC, it's a great tax credit because it's dollar for dollar that comes off. So I think that is the credit that's actually being underused in the taxpayers now.
So essentially, I can buy energy or a clean energy air conditioner for my house and get a tax write-off for it, dollar for dollar.
Yes.
Yeah, I was not aware of that.
Yes.
I think I need to go air conditioner shopping.
Yes. You do. Yes.
That's pretty cool. That's pretty cool. To kind of wrap things up here, What would you say is the most efficient time to start planning taxes or planning, or should it just be an all year thing?
I would say the most efficient time is in May.
Okay.
In May, our normal tax deadline is over now. And all of the accountants around the world, we kind of take that little break. But come that second, third week in May, we begin to strategize and look at the tax code and see what's changing. Some of us, of course, planners, not
Right.
preparers. So we have fresh ideas. So, that is the best time to begin to start looking for your tax planners, because I don't always want to say just look for an accountant, because sometimes they have that title, but they're actually not a tax planner.
Right.
So you want to make sure you're looking for someone that wants to look for planning and strategies for you, and not having to set it and forget it. Like, oh, taxes, we'll deal with it after Christmas, after the new year, and begin to start thinking about it in the middle of the year.
Yeah, that's a very good point. If you're wanting to know more about building your own plan, check out this video right here where we take estate planning to the next level. Christina, thank you again for bringing the expertise onto the show. We enjoyed it and can't wait till our next time that we get together about this.
Well, thank you for having me. I enjoyed it as well. I enjoyed conversating and learned a lot, as long as I gave out a lot.
Thank you.